We all know that it's an economic giant. It's the second largest world economy after the US. It has averaged double-digit growth for the last 30 years or 3 decades. Last year it had a GDP just in excess of 7 trillion. It's also the most populous country in the world with a population of just over 1.3 billion. It's been a member of the BRICS for some time, which is Brazil, Russia, India and China, the fastest growing emerging markets in the world. However, it's actually strived ahead of its partners, and particularly its Asia partner in India. It's now got 3 times the GDP of India. It's attracted significantly higher levels of foreign direct investment than India, but most of the investment activity has been concentrated along the coast.
The major points of this new land supply policy is to increase land supply for low-income housing. So no less than 70% of the total land supply for residential properties will be used for low-income housing. The second major policy is to crack down land stalking and land speculation. The third policy is local government has to make out detailed planning conditions before they put every piece of land into the market. The third point is they shorten the payment term for land contract and increase the deposit for land bidding. The third policy is reform of the land bidding system. So change the method, whoever offers the most get the land, and implement a comprehensive evaluation method with the price only taking 30% of all the factors. So this is the new changes in the land supply policy. Even if an investment was approved by the local government, it was still subject to the filing requirements of the MOFCOM. There are many disadvantages and controversials about the filing requirements of the MOC, but MOC will continue to keep on this policy. So our experience is that even if the local government approved the project, approved the investment, MOC in the filing process may still challenge it. And the basis for such challenge is whether such investment is a long-term investment, whether it is a speculation. I used to argue with MOC officials that all the real estate investment are speculations. There is no long-term investment. But from their standpoint of view, if it's a PE, if a private equity fund was involved as a major investor, they would challenge it and they would ask for more information about it is a long-term investment. So more and more investors have chosen to invest in the development stage of the real estate project in China. Development is more likely to be regarded as a long-term investment.
It is surprising that you could actually provide loans or mass loans in certain situations where we're not in that. But we're looking at some of these situations. But you could theoretically get from interest rates from 20 to 50%. So I think if you are giving a rate of 50% to somebody, it's probably going to go bust quite soon. But but still there are developers who are actually willing to take on that kind of situation and that kind of loan. Yeah, so it is an interesting time actually for foreign investors to look at China, although still albeit with a lot of risk involved. And if you're going to do that, whether you can actually, there are issues, and you probably can better answer that, whether you can have access to the title, you can foreclose if the guy doesn't pay up and so on. But definitely I think those are interesting situations at this stage.
Can you recommend any form of risk management, or what recommendations would you give the audience for due diligence when looking at either investing onshore or via an offshore structure?
It's used to say that there is a Chinese way of doing business. So the Western style documentation and the risk management is not applicable in China. So I heard many of my clients said about this, but my experience is that I think it's not necessary to lower your standard only because you happen to have a Chinese partner. There is no Chinese way of doing business. There is only high or low standard for documentation and risk management. So I think if you work hard, that's also the successful cases of my clients. If you work hard enough, you can persuade your partner to adopt your standard of documentation. And this is the first point. The second point is many local developers, especially listed companies, they are becoming more and more sophisticated, and they have a very, very lengthy documentations when they're dealing with investment with foreigners. So their standard is quite international or quasi-international.
Quite often, or in history, people have looked at Asia, and particularly China, as being an opportunistic play. Then you see the returns on properties in Beijing and Shanghai, and their income returns of 4.5%. They're higher total returns, they're sort of early teens unlevered, and they're much higher when they're levered. Do you think the returns on offer balance risk?
I think for us, on the core side, we are buying for operational use, so we are not really buying it on behalf of the fund. So if we wanted to go core for us, right now in Asia, from an investor's perspective, we prefer Japan and Australia. So for us, we are more on the opportunistic space in China right now.
Yeah, no, I mean, definitely China is quite difficult to invest into core, but having said that, I think our first investment was actually an office building, was a core investment that we had planned to hold it 10 years, but we actually sold it after, I think, 2.5 to 3 years. And the core investment became an opportunistic investment, and we made opportunistic returns. So I think that surprised us a little bit in terms of capital growth. So the way we look at China is, I think a lot of it is actually in the capital growth, and the income component is actually quite minor. But still, there is this income, and it's let's say we just take office. We just give an example. Beijing actually surprised us totally. So the time we invested in Shanghai, we actually looked to buy in Beijing. But when we price it, I think we at least, I think all common sense, I think we price it at a certain level, but the market was not giving you that level, and we felt that with the vacancy rate at that time, just before the Olympics, vacancy, they were trying to restrict, they were not restricting the supply, but the supply was like 20%, vacancy rate was 20%, and buildings were left empty. So, logically you could buy an empty building at, relatively attractive prices. Of course, they were not biting. But since then, if you look back, today the vacancy rate is like, 3-5% in Beijing, and rents have actually shot up by, 20-50%.
If you look at China, essentially from they don't have enough investable stock in the Chinese market. So I think, obviously, there's quite a lot of liquidity in the Chinese market, and because there's not enough investable stock, I think the Chinese would start to look outside China, and we are seeing this now. And when I talk to my European colleagues, we are seeing Chinese coming over, to places like the gateway cities in Europe, trying to buy core assets. I think for them it's both a defensive strategy and also to diversify. But I think, surely, given the fact that there's limited investable stock, they would have to leave their home country and look for opportunities elsewhere. And I think, given the fact that the RMB continues to strengthen, I think that's working towards their advantage. Or the euro and the US continues to weaken against the RMB, I think that's working towards their advantage as well.
So, okay, my experience is if your litigation case was handled by the big cities, by the court of the big cities like Beijing, Shanghai, Guangzhou, Shenzhen, it will be more easy to enforce it. If it is in a small town, in a small cities, so at that time connections will have very important part, and it might be very difficult. So I would like to go back to the question that gentleman raised about insurance. I read in the news that the former chairman of China Life Insurance Company, he sent a proposal to the NPC this week that requesting requesting the government to allow insurance company to invest in the social housing development. So I think this is considering the background of this person, he has very strong official background. I think this is a very clear signal that in the near future, probably insurance company is not allowed to invest in development of residential properties. But in the near future, it's very likely it can be allowed to invest in the low-income housing development.